Welcome back, traders. Last week, market delivered what we have anticipated. I've given a bullish view in my previous week's analysis. We'll post a link here so that you can watch my previous analysis. Now, I always say that market is a sum total of technical analysis and fundamental analysis. Fundamental analysis will give you the direction, but the technical analysis will give you the exact entry and exit level, and it is the most predictable form of analysis. So today again I'm going to decode the charts and I'll give you the next week's analysis for gold. And other than gold, we also have high probability setups for crude oil, dollar index, EURNZD, and Ethereum. So let's begin with our chart analysis, and the first instrument for the day is dollar index. I'll start from the monthly frame. I'll switch to line chart, and here we can draw fib retracements. So we can have our previous swing high and we have here previous swing low. I'm going to apply retracement reverse from high to low. High to low connected on fib retracement, and now I'm going to apply the trend line. So this is the lowest point and this is the point in between the two diverging highs. So we have H1 and H2 with bearish divergence. So here we have higher high formation and we got lower high formation on MACD lines. So I'm going to apply a rising trend line. We need to connect the lowest to the point in between the two diverging highs, the BOS point basically. And yes, dollar index is right now trading below the rising trend line. So the rising trend line has been compromised. It dropped precisely from the high, it dropped precisely to the low point and bounced back. So this gives the opportunity to apply fib extension in the bearish direction. I'll connect the highest to the first low formed and lower high formed. So now I get to see two fib lines coming together known as magnet support. Now since this is support, I need to change the color to green. That's it, and the environment on MACD histogram is still negative, still bearish. Now I'll move down to weekly chart, and on the weekly frame I need to connect again. Now there is a discrepancy on the basis of weekly frame. The highest point remains same, but the lowest point, so during this downward journey, the lowest point is here. So I need to adjust my fib extension on the weekly frame. So I'll connect again from the weekly highest to the first low, and I'll connect it back to the lower high. So now I get to see that the magnet has been shifted. There is slight change in the fib magnet levels. So I'll readjust the green highlighted zone. So I'll mark it again now. And yes, dollar index has not yet entered into the green zone based on weekly magnet. Now I was anticipating a pullback towards the fib resistance, basically magnet resistance, because we have two fib lines coming together here. So this is to be taken as fib resistance. So dollar index remains under pressure. The fib magnet resistance is at 101.04 to 101.19, and the next target zone is 95.78 to 96.72. Now I'll move on to daily. Now on the daily frame, after Mr. Powell has given the dovish hint, dollar starts falling again. So here we got the lower low formation, we got with bullish divergence. So I was expecting buyers to take over, but they failed. The breakout structure never happened. So this is the breakout structure level for buyers. Buyers never reached even closer to this level, and the price action in the bullish direction was quite submissive. So here I could see small bounces, not the continuation, and then dollar starts dropping. So we can apply fib extension here. I'll start from the BOS high point and I'll connect with the low and the lower high. So I'm gonna use this as my extension on the daily frame. So one more extension in the bearish direction applied. I'll change the color to red here. So the red fib lines are basically our closest target. So I'm anticipating that dollar index will keep moving downwards, and the nearest target is 96.56. An environment on MACD histogram is still bearish on the daily frame. Now let's move down to 4 hourly. On the 4 hourly frame, we got the three-wave structure in the bullish direction. So this is wave 1, wave 2, and wave 3. And now if the rising trend line is compromised, then it means sellers have taken over. And yes, the rising trend line has been compromised. So I need to connect the rising trend line on the three-way structure. So connecting the lowest to the higher low. And on Friday evening, after the announcement, yes, dollar index has breached the rising trend line and the environment on histogram is negative. So across all time frames, I see that dollar index will remain under pressure, and the closest target is 96.56 to 96.72, and the deeper target is around 95.78. So in short, I'll be looking to short dollar pairs, or we can go long against dollar. So we can go long in Euro USD or Pound USD. Now the second instrument is crude oil. Again, I'll be starting from the monthly frame here. On monthly frame, I'm going to apply Fib retracement from the lowest to the highest of the monthly chart. So this is the lowest point and this is the highest point. So I need to connect from lowest to the highest. Applied. And from the highest point, we got the corrective move downward, and we got a false break below the most important Fib zone, that is 78 to 85.4, and this comes with bullish divergence. So here we have lower low formation and we have higher low formation on MACD, which means sellers were done, they were exhausted, and then buyers took over the control and they have completed the breakout structure. So we have lower low and this is the breakout structure level. So now buyers have created a higher high pattern here. So I need to point out this is the high, the breakout structure point, and the higher high pattern. And higher high pattern comes with no divergence. So higher high and higher high, which means after this pullback, we can expect continuation in the bullish direction. I need to zoom in, and here now I'm gonna apply Fib retracement from the lowest to the highest, because buyers, they have confirmed the control here. So I'm going to apply a new Fib retracement here. I'm going to highlight this zone as strong area of support. That's it. And we have strong area of resistance between 14.5 to 23.6. And I need to remove the Fib here. I need to apply new Fib retracement starting from the lowest to the highest. And I can say that the corrective move, this is the explosive bullish move, and now we have corrective move downwards, and the corrective move downwards is also with bullish divergence, which is not yet fully confirmed, but potential bullish divergence, and it comes precisely at an important Fib level of 61.8. Now this is to be taken as support, closest support. Now I'll move down to weekly here, and on the weekly frame, I'm going to apply my Fib extension in the bearish direction, starting from the highest, connecting to the first low and then the lower high. So let me apply. So here we have Fib extension starting from the highest to the first low and connecting back to the lower high. So we have an added Fib level here. So 57.72 is acting as a very strong support now. Now bullish divergence got confirmed between the two low points. I'm connecting the two lows. Give me a second. Here. So I'm connecting the two lows, lower low formation, and the lower low formation comes with bullish divergence. Now, based on bullish divergence, we need to identify the breakout structure level. So I need to apply a dashed line for breakout structure, which is not yet done. If breakout structure is not done, then we need to apply the falling trend line. This is the alternative method of validation. So we have highest point and we have breakout structure point. I will join it diagonally. And yes, the falling trend line is compromised, it is breached, and the current price action is above the falling trend line. So my viewpoint is that maybe we might see one more low here and then a massive rise. So until crude oil holds above 57.72, the idea is to look for buy setup only. So now I will bring my vertical line on the lowest point, anticipating that this is the lowest point and buyers are now finally taking over the control, and I'm moving to daily now. Now on the basis of daily frame, here we have lower low formation and we got a bullish divergence, and this is double bullish, and we got the breakout structure. So buyers have confirmed their entry into the market. So I need to apply retracement starting from the lowest of daily to the highest, and the drop is to be taken as corrective. So after massive rally on daily, again we got the move downwards, and this downward move is corrective. So I'm going to apply fib retracement here. Start from the lowest and connect to the highest. Now the strongest zone on the retracement is between 78 to 85. So this area should hold as strong support, and the strong resistance is in between 14.6 to 23.6. Let's highlight the resistance area with red. So I'm anticipating that sellers are done because of loss of momentum here. I could see divergence building up and buyers can regain the control, and the first target would be the magnet area here. So we have two fib lines coming together and forming magnet. So the nearest target for crude oil is 67.5, followed by 69.98 or $70, again followed by 71.5, until it holds above 59.49 or 59.50. I'll move down to 4H, and on the 4 hourly frame I could see that in the latest move downwards we've got lower low sequence, and the lower low sequence on 4 hourly again comes with bullish divergence. So bullish divergence is being witnessed on multiple time frames here. Now I need to zoom closer, I need to zoom in, and I need to apply break of structure based on the bullish divergence on 4 hourly, and this is double bullish and the highest point is here. So I need to apply a dashed line for breakout structure. The breakout structure is not yet done, but the environment is now bullish based on MACD indicator. Alternatively, I can check the breakout falling trend line. So how to apply falling trend line? We need to connect the highest of 4H and we need to connect with the breakout structure line point. So I'll connect a diagonal line, join the highest and the break of structure, and yes, we are above this falling trend line. It means buyers have taken over the control. Now this is aggressive confirmation and I need to move on to 1H. Now on the 1 hourly frame I can see that buyers, they have taken the control from the triple bottom area, and the first move is here. So this is the lowest, and then we get to see high and higher low. So I can apply here fib extension in the bullish direction. So first fib extension in the bullish direction applied, and I need to change the color to green. So crude oil is right now sitting slightly higher than 61.8. The next target is 64.25, followed by 161, so fib extension 1.618, which is price level of 65.29, and this is also a magnet resistance zone, followed by 65.93, and the next major magnet is either at 66.97 or 67.61. Now if you notice, In the recent move on 1 hourly frame, I can see that buyers are looking exhausted. So I won't be surprised if we get to see some pullback. And unless it remains above 62.50, we should buy the dip and we should hold for the first target of 65.29 followed by 67.50. If it closes below, if it breaks below 62.57, then there would be a higher probability of one more retest, or basically one more low being created on the higher time frame, and then I'll wait for the next bullish divergence. So in short, I'm looking to buy the dips in crude oil. The next instrument is euro against New Zealand dollar. So here I will start again from the monthly frame, and on the monthly frame, based on the previous downward move, so here we have high and low. I need to connect from high to low on Fib retracement. So I'll start from the highest to the lowest, and yes, we got the bullish reversal here, and the bullish reversal comes after bullish divergence, so lower low formation here with bullish divergence. And now I get to see the sequence of higher lows and higher highs here. So I will start applying Fib extension in the bullish direction. I need to zoom in. I'll start applying my first Fib extension in the bullish direction. I'll start from the lowest. I'll connect with the first high and the higher low. So the first cycle completed. I will bring a vertical line on point C here. So this is A, B, and C for Fib extension. Now I need to connect to the next Fib extension, basically next ABC cycle. So here we have A, we get to see point B, and this is point C. So second ABC to be applied, and I will connect again, extension, connecting A to B and point B to C. And we look for the duplication zone. So basically we have a strong zone of resistance here, and the next anticipated strong resistance zone is around 61.8. So we have identified both, but we do not have any loss of momentum. So buyers, they are marching strongly upwards, and histogram is extremely bullish here. So I do not see reversal on the basis of monthly frame. I will move the vertical line to the latest point C. Now do we have another cycle in the bullish direction? Yes, I have identified one. So we have lowest A, and then we get to see point B and point C here. So let's join and connect A, B, and C. So third bullish cycle now being applied on the monthly frame, and that's it. We need to bring the vertical line to point C and look for the new magnets formed. So here I can see that we have a strong confluence. So 1.9692 is now very strong support because our current price is higher. The next major resistance is at 2.0105. Now I cannot apply a new cycle, so I need to move on to weekly. Now on the weekly frame, starting from the vertical line, we need to pick the new cycle here. So I can connect the lowest here. So this is the lowest point, and I can connect with the first high and higher low. So this is the first cycle on the weekly frame. So let's apply our first Fib extension of weekly. So starting from the lowest, connect with the high and higher low, and just change the color of Fib extension. So I'm using now orange lines for the latest Fib extension on weekly. So we have a confluence of support. So this is now our magnet support. So 1.9692 to 1.9779 is a strong area of support. And the next major resistance is at 2.0105 followed by 2.0304. So this is the area of our magnet resistance. Either we can call it as area of resistance or magnet resistance zone. That's it, and we can bring the vertical line to point C. Do we have another cycle? Yes, we have one more cycle in the bullish direction on the weekly frame. Starting from the same line, A, we have B and point C here. So let's apply another cycle here. So one more fib extension applied on the weekly frame, and now I get to see that the area around 2.010 to 2.0178 is the closest magnet resistance. So here I can see two fib lines coming together, so it is the closest magnet resistance. But at the same time, I do not see any signs against MACD. Lines are rising clearly and histogram is also rising clearly. I just need to shift the vertical line to point C and move down to the next lower time frame. Now here, starting from the vertical line, I just need to adjust the vertical line. And yes, starting on the vertical line on the daily frame, I will connect A and I will connect high with higher low. That is A, B and C formation on daily chart. So let's apply A to B and B to C. So the plan is, now we are very close to the fib resistance. So based on candles, yes, we are very close, which is also like a double top formation here. So I won't be buy immediately on the top because higher time frames are extremely bullish. So I do not see that market is gonna reverse from this area. So there would be a pullback, and the plan is to buy the dips. So the first area of buying is around 1.9660 followed by 1.9318. So if we get to see a deeper pullback, take it as an opportunity to buy. We can also apply here a rising trend line, and the closest trend line will start from the vertical line on the daily. So this is the lowest point, and this is how we can join the trend line. So in case I get to see the pullback from the magnet resistance area, I will patiently wait for the bounce on the trend line, the rising trend line, and then I will look for buying opportunity only. So Euro New Zealand remains extremely bullish based on multi-time frame bullish synchronization. We can move down further to the lower time frame, that is 4H. I just need to bring the vertical line on the latest point and move to 4H. Now here on the 4-hourly frame, I can see the pattern is extremely bullish. So here we have lowest point of 4H followed by higher low, higher low. I can see high, higher high and higher high, and there is no bearish divergence on the lower time frame, which means most likely it should continue in the bullish direction. So if I get to see a drop around 1.9794 or a deeper pullback towards 1.9692, I will take it as an opportunity to buy, and my first target would be around 2.0150. So this is the plan for Euro versus New Zealand. Buy the dips. And the next instrument is Ethereum. Now I'll start from the monthly frame here. Now, Ethereum right now is at an interesting level, make or break level. I'll explain the setup here. So based on the monthly frame, we could see high followed by a higher high, and there was no bearish divergence. So higher high confirmation on price with higher high confirmation on MACD. So we were expecting the continuation. So I'm gonna apply reverse fib connecting the highest and the lowest. So reverse fib is a mechanism which also acts as extension, fib extension. So here again, the strongest level is between 23.6 to 14.6, and after the drop it bounced exactly from the same area, and now the closest support is here. So we need to highlight this as green, and we need to highlight the lower fib area also with green being support. Now I will use fib extension here in the bullish direction. So we have the lowest point here, A, B and C. So let's apply our fib extension in the bullish direction, connecting A to B and point B to C. So currently we are at the previous high zone, and this is also the area of magnet resistance. But based on MACD lines and MACD histogram, this is still rising. So no divergence identified. I'll quickly bring the vertical line to point C here and move to the next lower time frame. If I zoom out, then the next major confluence of fib lines is around 6184 and 6036. So basically the psychological number of 6000 is the next upcoming major target for Ethereum. Being resistance, I need to highlight this with red. That's it. And now I can move down to the lower time frame, that is weekly. Now I'll start from the vertical line. Now on the basis of vertical line, if you notice, buyers, they triggered the bullish rally and price stalled near 78.6, which is always a very strong level of resistance or support depending on the market direction. And then we got the drop, and the drop was basically controlled. It was given support again on the duplicated fib line. So basically the area between 61.8, 3275 to 3457. So now we have a very strong support. So 3275 to 3457 is the major support for Ethereum. Highlight with a different color. I cannot apply here extension because we do not have these cycles completed, but MACD histogram remains extremely bullish. No signs of exhaustion. We need to move down to the next lower time frame, that is daily. Now only on the daily frame I can see that it has created a sequence of higher highs. So it has, the current price action has surpassed the previous high, so which means new bullish high has been created, and we have multiple ABC patterns here. So we can start from the lowest A. I can connect with the first high and first high low. So this is the first bullish extension pattern here. So I'm going to apply my first fib extension on the daily frame. A to B and B to C identified and applied. I need to change the color of the fib lines, and yes, we are exactly on fib extension 200%. In terms of price level, this is 4,932. If I switch to candles, you will see that the current rally has reached exactly very close to 4932, and there is a probability that we might get to see bearish divergence here. So if I change it back to the line chart, I'm anticipating that buyers can stop and complete the bearish divergence here, and then we will expect some correction. But I'll be taking the correction as an opportunity to buy because higher time frames are extremely bullish. I'm going to connect the rising trend line here. So this is our daily rising trend line. Now the plan is, if I get to see correction from the current high, I'm not going to get involved into sell trades. I'll be patiently waiting for the drop, and the first opportunity is around 4,000. If it gets deeper, then the next opportunity to accumulate my buy position would be around 3570. So if I get to see drop towards 3570 to 4,000, take it as an opportunity to buy and hold it for the target of 6,000. So short term, I can expect a pullback here, and this pullback may take a week or two or maybe slightly longer, and then the next rally will take it to the price level of 6,000. And finally, I'm moving to gold. Now here on the monthly frame, this is extremely bullish. I'm not going to repeat the extensions here. The pattern is extremely bullish. We have higher high formation and higher high formation of MACD lines and higher high formation of MACD histogram, which means buyers should continue. When I'll move back to weekly, on the weekly frame, I could see that current environment is slightly negative based on histogram. So currently we have histogram running negative on the weekly frame, but there is no bearish divergence, the regular type. So here I could see only containing style bearish divergence. We have higher high formation and we have containing bearish divergence, which is not considered a very strong type of divergence. So on the basis of divergence, I'm going to apply the breakup structure, the middle point between the two highs. And the sellers, they failed to break the structure level here. So the pullback to be taken as an opportunity to buy here. because monthly time frame is extremely bullish. Now I'm switching to daily here, and on the daily frame I'll be applying fib extension in the bearish direction. And what's the reason for that? So here we have bearish divergence. I'm connecting equal highs here, so we have higher high pattern, and higher high pattern on the price chart is with bearish divergence, in fact starting from the previous high. So we have bearish divergence, and the breakup structure is here. Now breakup structure is not done, but I'll be using trend line method here. So I'll connect the lowest point of the daily. I need to zoom out so that I can show you the lowest point of the daily I'm considering here. So this is the lowest point of the daily. So lowest of daily identified, and the breakup structure point identified. I need to connect with a diagonal line. So this will give me the rising trend line. And on the daily frame, I can see that the rising trend line was compromised. And the trigger point is I can now connect high, low, and equal high. And the second one would be high, low, and the lower high. So let's apply the fib extensions in the bearish direction. So connecting the highest to the first low, and then back to the equal high, and then connecting the high with the next low, and again back to the equal high. So now I could see duplication here. So the duplication point is here. So this is super strong support, and we have super strong magnet resistance at 3435. Let's highlight with red, and I need to bring the vertical line to the latest C point. Here is the latest C point. Now, do we have more cycles in the downward direction? Yes, we have one more. So let's apply. We have high, we have low, and we have one more low high, which is confirmed with P and P formation here. So I'm going to apply my next fib extension in the bearish direction. So this is the third one in the bearish direction, connecting A to B and B to C here. So on the basis of the latest fib extension in the bearish direction, there was a support at 3301, which is still acting as support because we have not seen gold breaking below 3301. So this is the closest support, followed by 3333, and the nearest target, the nearest resistance is at 3398, followed by 3433. And I can see that the environment is again changing from bearish to bullish here. MACD lines, they are on the verge of making a bullish crossover. Now I need to change to 4H. Now here on 4-hourly frame, I could see buyers coming back. We have bullish divergence at the bottom here, and bullish divergence with confirmed breakout structure. So this is starting point for the buyers. This is the high and this is the higher low. First of all, I need to apply retracement. I'll start from the lowest, connect to the highest, and we got the drop exactly towards slightly lower than 61.8 here, and the drop comes with bullish divergence here. So bullish divergence on 4-hourly identified, and we are now on the break of structure level. So let's apply break of structure here. One second. I'm gonna reapply fib retracement on 4H, done, and I'm gonna connect a trend line here, starting from the highest of 4-hour to the break of structure here. So first of all, I will use a dashed break of structure line, and we have crossed. Gold has closed higher than 3368. The closing price on Friday is 3371. So break of structure is done, and alternatively we also have the confirmation on the basis of falling trend line. So falling trend line on 4-hourly is compromised and buyers are back. So we got the break above the falling trend line, we got the perfect retest and the bounce. So we can use the lowest point as the trigger on 4H. So here I'm going to apply ABC in the bullish direction. I'll start from the lowest, I'll connect with the first high and the higher low, and I'll change the fib line to green. So on the basis of extension, the next target, we have already touched 3377 on Friday, and the next target is 3390, followed by 3398, and followed by 3411, 3424, and the ultimate resistance is at 3435. And the environment is extremely bullish, and I'll move the vertical line to point C here on the 4-hourly. Now I'm moving to the next lower time frame, that is 1H. And here on the 1-hourly frame, I can see buyers are in full control. So we got the massive breakout here. Now we are very close to the resistance. So 3377 is our magnet resistance on the 1-hourly frame. Now from the current level, we will get to see the pullback. And unless it remains above 3333, the plan is to buy the dip. So in the coming days, unless we see a break above 3435 and a close below 3333, the plan is bullish, buy the dips. I hope my today's video was helpful. If you like my content, give me a thumbs up, subscribe to my channel, stay sharp and trade smart. I'll see you next week.